Welcome to a presentation on your federal employee benefits. While the U.S. government offers one of the best benefit packages available, first let's examine your federal employees group life insurance program, or Fegli. There are 5 Fegli programs offered which provide benefits at your death. They are Basic Insurance Amount, Extra Benefit Amount, Option A, Standard, Option B, Additional, and Option C, Family Coverage. Keep in mind that all 5 programs are voluntary. However, you must be enrolled in the Basic Insurance Amount to qualify for the other programs. The amount of protection or coverage which you are provided under the Basic Insurance option is equal to your annual wage, rounded up to the next $1,000, plus $2,000. So a federal employee with a base annual income of $39,200 would have coverage of $42,000. That's the $39,200 base income rounded up to $40,000 plus $2,000. The biweekly cost for the basic insurance equals 15.5 cents per thousand. For an employee with $42,000 of basic insurance, the biweekly cost would be $6.51. This cost will increase every year that the amount of basic insurance increases. If you are a postal employee, premiums for this coverage are paid by the Postal Service. The basic insurance amount increases as your base income increases until you reach the age of 65 or retire. At this age, your coverage will start to reduce, so that within 4 years, you will have lost 75% of your protection. Only the remaining 25% of your basic insurance will continue for the balance of your life. If at age 65, the amount of basic insurance protection totals $80,000, within 4 years, only $20,000 would remain. The reduction in coverage after age 65 is identified as the first major problem with the federal employee benefit package. The reason is simple: lower protection at the time when it will most likely be needed. Look at the statistics regarding 10 typical people starting employment at age 25. By the time they reach age 65, fewer than 1.5 have died. It is the beneficiaries of these small number of employees who ultimately benefit the most from the Fegli coverage. And what about the survivors? What about the 8.5 employees who are still alive by age 65? They will see the amount of their basic insurance reduce by 75% within just 4 years. This reduction occurs at the time when an increasing number of surviving spouses may need insurance benefits the most. This is your basic insurance amount. Remember that in order to participate in any of the optional coverages available under Fegli, you must be enrolled in the basic insurance benefit. The first optional benefit is known as the extra benefit amount. The amount of this benefit is initially calculated in the same manner as the basic insurance benefit. That is, your annual base wage. This benefit is actually not an option because there is no cost for it. It is free and automatic to anyone enrolled in the basic insurance benefit. One major problem with the extra benefit amount option is the coverage starts reducing immediately after age 35. The amount of reduction is 10% of the original benefit each year for 10 years. At age 45, there would not be any coverage remaining. The extra benefit amount is high, and the cost to you is zero. However, the coverage is available at a time when statistics indicate not many employees will die. The next benefit is Option A. Because of its cost, Option A is often selected. It provides an additional amount of $10,000 of protection on top of any other coverage. Unfortunately, at age 65, it reduces exactly like the basic insurance benefit, so that within 4 years, there is only 25%, or $2,500 of protection remaining. And the cost of Option A also increases as the employee's age increases. With Option A, the participant would have paid in a total of $1,555 from age 35 to age 65. This $1,555 investment would have provided $10,000 of protection during these working years. Again, years when statistics indicate that the chances of death are not nearly as great as they will be after age 65. Once age 65 is reached, the Option A coverage starts reducing. If this participant's death occurred after age 69, the remaining coverage would equal only $2,500. This means that for the large number of participants who will not die prematurely, a total of $1,555 will have been paid to generate a benefit of only $2,500. Next is Option B. This benefit provides an amount of protection equal to as much as 5 times your annual wage. The individual earning $40,000 per year can purchase up to $200,000 of Option B protection. If this individual's annual wage increased to $80,000 by age 65, then the amount of coverage under this option would have increased to $400,000, 5 times the $80,000 wage. As with all of the options we have reviewed, Option B also has the disadvantage of reductions starting at age 65. However, the reduction under Option B is calculated differently. At age 65, the benefit will reduce by 2% per month. What will this mean? By the end of only 50 months, the amount of Option B coverage will have reduced down to 0. That's right, in a little more than 4 years, the Option B protection has completely vanished. Again, the basic flaw with Option B, as it is with any Fegli option, is the fact that your protection reduces when you may need it the most. The bi-weekly cost for Option B starts out very low at 3 cents per thousand for someone under the age of 35. At age 40, the cost has increased to 6 cents per thousand every 2 weeks. By age 50, the cost has climbed to 15 cents per thousand. And at age 60, the cost has increased to 70 cents per thousand bi-weekly. Due to its increasing cost, an individual age 35 will find that the overall expense of this option has increased by 2,300% by the time he or she reaches age 60. This means that the individual with $400,000 of Option B protection at age 60 would be paying a premium of $280 every 2 weeks. With 26 pay periods in a year, the total annual cost for this coverage would be $7,280. Even if an employee elected to receive a lower benefit under Option B, the total Fegli cost over a worker's lifetime could easily exceed $30,000 to $50,000. With an expense for coverage that is potentially this large, it's important to look closely at exactly what you could expect to receive from Fegli. Fegli is a group term program. You never are able to recoup any of your premiums, even if you cancel your coverage after years of participation. All that you really have is death protection. But as we have pointed out, perhaps the greatest weakness with this protection is that for many participants, Fegli won't be around when their beneficiaries need it the most. Let's look closer at your Fegli options when you reach retirement age. Assume that the employee in our previous illustrations had not elected the Option A coverage. Instead, he had decided to participate in the basic insurance amount, plus he elected to participate in the maximum Option B coverage. He could have paid $68,000 for these benefits over his working years. Now, at age 65, he has a total of $480,000 of protection. By electing the basic insurance amount and Option B coverage only, at age 65 he would no longer be required to pay premiums for this coverage. However, in a little more than 4 years, he will see his benefit amount reduced down to just $20,000. That's a loss of $460,000 of his protection in just 4 years. An employee does have the option of limiting the reduction that would normally occur in both the basic insurance amount and the Option B amount. In our example, the reductions in the basic insurance could be limited to a level of $80,000. However, limiting the reduction will require that he continue his premiums. Fegli will require that he pays an additional $163 each month for the rest of his life in order to limit the reduction in his basic insurance to this $80,000 level. Because $20,000 of his basic insurance amount would have automatically continued at no additional cost, this $163 monthly payment is providing for the continuation of only $60,000 of additional basic insurance coverage. Keep in mind that this extra cost comes after the participant had paid premiums in excess of $68,000 over his working years. Option B coverage may also be continued without reduction beyond age 65. But as with the basic insurance, to continue your Option B coverage, you'll need to continue to pay premiums. The individual in our example would have to pay premium payments of over $7,000 per year to continue his Option B coverage once he reaches age 65. The costs of continuing the basic insurance amount and the Option B amount come at a time in most people's lives when they are trying to adjust to a lower income due to being retired. With a lower income, most people are attempting to find ways to reduce their expenses, not increase them. Deciding whether to continue Fegli coverage and continue any accompanying Fegli premiums can be a difficult one to make when caught between the dual realities of a limited budget and a need for protection. When confronted with this dilemma, many federal employees have chosen the alternative of private life insurance. These employees understand the advantages of relying more on privately owned life insurance and less on their federal group life insurance.